All right, let's talk about this Black Monday, as it's being called right now, getting close to the market close here. The Dow tumbling 1,000 points. S&P 500, worst day since 2022. This global market sell-off right now. It's likely we are entering this World War III moment in full swing. Massive drop in stock markets around the world. Iran announcing it's about to attack Israel, which could come at any moment. So we're monitoring that. Japan's stock market is the most affected with a drop of about 10%. So Japan imploding. We'll talk more about Japan in a second, how this is so tied to the U.S. dollar. You want to pay attention to this. Turkish stock market plunging by 7%. Taiwan's stock market also had worst day in 57 years. In Taiwan, NASDAQ plummeting also. Here's how Fox Business reported this breaking recession fears. Watch.
History in the making.
What some would call history in the making.
Don't say that.
We have never been down 1,000 points ever, not even intraday on the NASDAQ.
Is that true?
That is true.
Okay. Down 6% right from the get-go. This is heavy big tech. Here we go. Look at them go down. Microsoft is down $20. That's 5%. Alphabet, 5%. Meta, 6%. Amazon, 6%. Apple, 9% down. Let's pull out Apple. This is interesting. A question.
Yeah, guys, and also think about the banks, right? As this is all rigged, they've told us that they don't have enough money to cover the losses.
Yes.
Right? We know this from the FDIC, right?
Yeah.
The Federal Deposit Insurance Commission, right? We know that they don't have the money in the banks. So you want to go get cash out of your bank? Good luck. They will tell you to come back. So I've seen a couple of our friends online today saying, get your money out of the banks. Mm-hmm. Well, good luck with that, because you're not going to be able to get it. You're not going to be able to get your money out of the banks. And the money, if they do use your money, will be to bail in themselves because of this disaster that we're sitting on right now. Not a bailout. They will be bailing in using your money, which they approved. The government signed a law allowing them to bail in your money to get them out of this quagmire right now. So, I mean, think about that. You've got money in the bank, your hard-earned dollars sitting there, and you think, oh, this is protected by the Federal Deposit Insurance Commission. Great. It's not. Even if they tell you it's protected up to $250,000 for your deposits, where do they have all of that money? They don't. They don't have that money to cover those debts.
No, it's less than 4% of the money in our economy exists in paper form.
Right.
We've known this. We've been talking about this for years now.
Well, we've been warning for months that this was coming, this specific moment was coming, and here we are. Welcome to Black Monday, the largest market crash since COVID lockdowns. Of course, sets the markets into massive sell-off. We are sitting on a precipice of a global financial meltdown right now. And, of course, this is all coming right before the 2024 election. It's shocking, I know. They want to control the money system. They want to control the financial system. What better way to do that than to lock everything down, keep you from pulling your money out of the financial system? So, here's the front page of the Wall Street Journal just a few minutes ago. Dow sinks 700 points. Global sell-off intensifies. There are a couple of big parts of the story. Employment, the U.S. dollar, commercial real estate loans all coming due. No one wants to refinance these commercial real estate loans right now into higher interest rates. They've had these 5-year adjustable mortgages. And so that's why all of these office buildings are mostly empty. They're like, well, okay, 40% of our office space is now empty. Are we going to refinance an office building that no one's coming to into a higher interest rate? Again, we've been warning about this for months, and now many of these are coming due right now. Panic also setting in for Japan. Did you want to say something?
Well, I mean, let's just think about the lies that we're told about Wall Street when we're watching American football games and things like that. And we say, invest in Fidelity, max out your 401k, max out your IRA. So the people who have followed that advice have seen the rug slip out from under them now on a regular basis. Now, it used to be that economists would say, well, put your money in the market, in the financial market. And it's not timing the market, it's time in the market. But we'll see a major market correction every 10 years. That's what we've been told to expect. Well, now we're seeing them every 5 years. And again, economists who are honest have been warning about this. One of my favorite is Harry Dent, who says we're no longer on a 10-year dump cycle, which it takes 10 years to recover what you lose in those crashes. So
Right.
anyone who has been partnering with the government to invest in the stock market continues to lose, but they keep pushing this crap at you. Again, every time there's an Olympics or a Super Bowl, they max out all that money to tell you to partner with the government to invest in the stock market, and you just keep taking it up the butt if you do that now on a more regular basis.
Right. And the Harry Dent's point is great because everyone's like, oh, well, yeah, all my 401k recovered after 10 years of a recession.
But that means you didn't gain anything.
Yeah. So in 10 years, you mean you just like had your money sitting there waiting for it to carve back? That's 10 years of wasted time.
But you cannot do that if we are going to be on an every 5-year recession, every 5-year stock market crash. And again, why do we do that? Because of government perversion. Because we print more money than we use more money than we have, so we print it. And we also invest heavily in foreign wars instead of our domestic production. That's literally it. It's honest and it's true. And nobody will say that other than a few economists who are honest who will get made fun of.
Almost no one will talk about that, like where this money is going to fight foreign wars right now. They won't talk about the root cause. They're also not talking about what's happening in Japan. And Japan, of course, over the last 24 hours, they've seen their worst decline since 1987. As we reported on this show a few months ago, Japan were sort of bullied into buying up a lot of U.S. debt. They were going to unload a lot of U.S. treasuries, and Jerome Powell, the Fed, basically said, "Please don't do that. Please don't do that. We'll give you, we'll give you support in other ways, but please don't dump U.S. treasuries. It'll really send things into a free fall." Well, guess what? Japan right now is in a world of hurt. They are the largest holder of U.S. treasuries. They wanted to start dumping U.S. debt last year, but of course Powell went in and said, "Don't do it. Don't now." And now Japan raising interest rates. Every other country slashing interest rates. They're raising interest rates because the yen is circling the toilet. So they needed to do something. Well, guess what? When you raise interest rates to help the yen, that hurts the U.S. dollar. See how this works? So we're going to talk more about Japan later in this week. I'm working on a full report right now about Asia because that is really a major piece of this story. But since at least 2023, speculators borrowed money in Japan at near zero interest rates. And then they converted their borrowed yen into U.S. dollars. And that's not going to work. That's a recipe for disaster. It's like robbing Peter to pay Paul, right? Was it robbing Peter to pay Paul? Something like that. So this has driven the yen into the toilet, a total disaster. Now something happened which triggered overnight the Sam Rule recession indicator. So everyone wants to start, are we in a recession? The Biden administration changed the definition of what a recession is, and they even locked the Wikipedia page about recession, so you can't go in and make edits. Isn't that amazing? Like the Biden administration is like, you know what? Okay, we're in a recession. We'll just change the definition of recession, and then we'll have our powers that be lock the Wikipedia page so no one can actually make edits to the Wikipedia page. I love it. Anyway, the SAM rule, recession indicator. You want to talk about this? This is really fascinating because we had it in the newsletter this morning. A lot of people don't know what this is, but I think to our audience, it is, maybe to the layperson, it's a really important indicator.
So it's when a 3-month average drops by 0.5%. So unemployment right now, the 3-month average is, 4.1%. At this time last year, it was in the 3.5% range. So when unemployment drops by at least 0.5 percentage point from the previous time last year, that is an indicator since the 1970s that has been an indicator of a coming recession, if not depression. Now, something that, again, we like to platform economists who are honest about this. I can mention a few: Harry Dent, Carol Roth, Peter St. Onge. One thing that Peter St. Onge said just this morning is that only normies don't think we've been in a recession. Regular people who live in the real world understand that we felt like we've been in a depression for months and months. It's just normies in the media who pretend this is brand new information, just to quote Phoebe from Friends. That is brand new information.
Just like figuring out Biden has dementia. What?
Yeah.
We had to wait for a CNN debate to learn this information?
Yeah.
You didn't know that Biden has dementia? Oh, my God.
No.
Yeah. We just found this out.
Right. Shocked. I'm shocked.
I've just been sitting here counting all this money I have because what you're saying, the dollar crashed too. I don't understand.
You need to get out of your Scrooge McDuck swimming pool and take a look around you. Read the room.
Spitting coins while you swim on a backstroke in this. So the SAM rule has a 100% accuracy rate for a recession. predicting recession. But the biggest part of this is employment. Okay, so that's part of the Sam rule, this employment problem right now. And the biggest piece that no one's talking about because they won't talk about it in the mainstream media, God bless this individual for actually mentioning it, though, I can't believe he did, is illegal immigrants taking American jobs. So Americans losing their jobs over here and then being replaced by illegal immigrants. That's the real story here on the employment crisis. Watch.
What about the recession? Are we headed to recession?
I believe we are. And Stuart, it's been the consumer. The consumer drives 70% of the market, and the consumer has been pushed to the brink, and we're starting to see that. Now, there's been this false belief that the strength of the employment market, that it had to do with the amount of employees that are being hired. What is in reality is that 1.2 million Americans, U.S. citizens, lost their jobs, which were replaced by 1.3 million foreign-born or illegal immigrants. That is U.S. labor statistics. That shows that the labor market was never as strong as it was, and a lot of the new jobs being created by part-time workers, it's never been as strong as it was. Now you're going to see layoffs, and there's going to be more carnage in the future, leading us to a deeper recession.
So, okay. Yeah, a number of factors here, right? You have these overinflated reliance on 7 big tech companies, the Magnificent Seven, and you have this over-reliance on what is NVIDIA doing, what is Google doing, what is Alphabet doing, what is Apple doing, all of that.
Right. We talked about the tech job layoffs that have been over the last 6 months, just 2 weeks ago. Yes.
And then you have an employment piece of this, which they don't want to talk about. Americans losing their jobs, being replaced by illegal immigrants. This is a big piece of it. And yes, I see people in the chat saying, why don't we know about this? Do you think the mainstream media is going to report? A Biden mainstream media right now, a corporate media is going to report and tell you the truth about the employment picture in the United States? They are not.
No, independent media has been, though. That's why I am not shocked today.
Yeah, I know. I'm not surprised at all about this. And if you understand Japan, again, deeper connections there in the history with the U.S. Treasury and the reliance on U.S. dollars and U.S. debt, that is a big, big piece of it. Go ahead, Philip.
Oh, sorry. I was going to say that one of the things, with the dollar and like why the stock market is kind of going down with it is because these people that were borrowing against the yen, that were borrowing yen, were actually investing that in the stock market. And now these margin calls have come, and with the interest rates up, they have less money. They have to sell everything off basically to make the money to pay back the what they did. So it's just like it's like a big Ponzi scheme. I only know that because of Reddit. Like I hadn't heard that anywhere else. You just won't see it
exactly.
out there.
So converting your yen to U.S. dollars, then buying the NASDAQ 100, and then these margin call Monday hits, and you have to pay it back. Boom, right? I mean, This is a big piece of it, but not the only piece.
And so interesting that so many trading platforms had outages or shortages or some kind of small crash today. Like, oh, you can't sell right now with the rest of who can sell? Not you, right?
Yeah.
So that's another piece of it that we will continue it to unfold before us, and I'm sure we'll see congressional hearings about how that happened, why that happened. Were we prepped for it by the outage 2 weeks ago that affected the airline industry and the banks? It seems like suspicious timing. Well,
I mean, it's again how it's rigged, right? Of course, it's rigged. I saw someone coming in the chat here. Yeah. Anyway, there's a couple of people here who are saying Steve Sarsic says 1929 all over again. A lot of people who were ready and planned for this. We've been, again, covering this on the show for months. This shouldn't come as a surprise to any of you guys who are subscribed to our channel here and who watch us on a regular basis. Donald Trump posting this on Truth Social just a few minutes ago, saying Japan down 12%, India down 6%, Germany way down also, U.S. really bad. This is a preview of the world markets without Donald J. Trump in the White House. None of this happens if Trump is in. Kamala and the markets don't go together. She'll destroy the markets. She's in power now, and look at what is happening. 1 week of the fake media saying better polls and you get a market crash. The legendary Howard Lutnick.
Okay, but I do want to push him a little bit on this because he is the one who instigated the first rounds of COVID stimulus, which was a massive wealth transfer. Would have not been necessary had we actually followed science on COVID. So that began the last recession around COVID. So, I think that I don't want to have false idolatry here, like one person has the answer to this when clearly it's a systemic problem.
Clearly. And, but markets are moved right now by some of the horse trading right now. Is Trump going to be president? Is Kamala going to be president? And all of these polls over the past few weeks and all of this effusive love from the mainstream media, the corporate media, that's like, Kamala's our girl, right? That has now moved some of these indicators, and the odds of Trump becoming president have declined on the odds betting. And that has also spooked markets. So take that for that's what they're calling it, the Kamala crash today. So people are saying online, oh, it's the Kamala crash. Okay. So, obviously politics back and forth here. Donald Trump, Kamala Harris playing games with this right now. But, Kamala Harris, I think she's really strong on the economy. And she was just asked, how will she handle inflation? How will she handle the sort of stagnation in the United States? Consumers are really feeling the punch right now on prices. How are you going to fix it if you become president of the United States? I think she's great with this answer.
What else are you going to do to fix this problem with inflation?
All right, thank you. Well, let's start with this. Prices have gone up, and families and individuals are dealing with the realities of that bread costs more, that gas costs more. And we have to understand what that means. That's about the cost of living going up. That's about having to stress and stretch limited resources. That's about a source of stress for families that is not only economic, but is on a daily level, something that is a heavy weight to carry. So it is something that we take very seriously, very seriously. And we know from the history of this issue in the United States that when you see these prices go up, it has a direct impact on the quality of life for all people in our country. So it's a big issue, and we take it seriously. And it is a priority, therefore.
Okay, yeah. They're going to take it seriously and make it a priority.
She just mansplained, like she mansplained the question. Like what are you going to do to fix inflation? I'm going to, exhaustively define it for you. And then this is
yeah, exactly. Do you feel better about it? That's what's going on right now. So
helpful.
Yeah, I mean, protect your families right now. And again, if you've got all of your eggs in U.S. dollars in U.S. banks, please, we've been warning you for like a year and a half, 2 years now on this show. Protect your families. Protect your families.
Yeah. Look at what an asset is. What is an asset? Usually not something that you partner with the government to invest in.
Yeah.
That's just, what is a real asset? So, okay.
And I mentioned, we'll leave it there. But earlier I mentioned gold soaring, and someone said, "Oh, gold's not soaring." Well, no, not today. It's down about 1.4%. But in the past year, it's up 26%. Gold just hit an all-time high. So when you look at a real tangible asset, you're talking real estate. You're talking gold, you're talking silver, right? You're talking about actual tangible assets that have been around for 4,000 or 5,000 years as a store of wealth. So again, I like it. I like a track record of 5,000 years, even through the collapse of the Roman Empire.
Yeah.
I like precious metals. I like real estate. That's our personal preference. But you guys, you do you, as we like to say.